Welcome back. Let's get straight into this market picture then, which certainly has been perhaps a little bit surprising. Some news coming out of Asia with regards to banking stocks and the like, and we'll unpack that in just a moment or two as well. Really quite interesting on that part of the world, the likes of Standard Chartered as well as HSBC. What seems to be a little bit of trouble around money laundering as well is an element that we will be discussing in just a moment. But overall, though, a bit of a shaky start to the trading picture out in Asia. Japan was actually had their markets closed today for a public holiday, and the market not really trading on that front. But the Hang Seng and the Shanghai Composite going down, a big fall for the Hang Seng there, more than 2% down. Of course, as I made note of, the likes of Standard Chartered, big banking stocks there having fallen on that front. That negativity has filtered through to the European market, which is more than 3% down across the main indices there, 3.3% down each for the FTSE 100 and the DAX out in Germany as well, with the CAC 40, a similar mark there, still in negative territory. All of that has meant that South Africa also getting hammered then. The JSE All Share falling off 2.2%. Big falls today, particularly for the platinum miners, which have fallen nearly 4% thus far, down at 73 points there as well. The banking count is also suffering 2.7%, which means financials have a similar fall today. Resources continuing the saga that is the red of the market today, 2.6% weaker. If we just take a look at any stocks that may have gone up this afternoon trading, Murray and Roberts in terms of construction stocks is 6.5% to the good. Robex as well as Sun International enjoying some positivity. Perhaps we get a sense of positivity with Sun International because we are getting to level 1 of this lockdown, and who knows, things may get better from a tourism point of view as well. In terms of red, well, what hasn't gone down is perhaps the big question. In terms of the all share, the likes of Hammerson, THL, the City Lodge, as well as Woolies, of course, having come out just last week with a set of earnings as well. Not looking too good. They are looking to try and focus in on their FBH, food, beauty and health business as well, which didn't do too well, falling more than 10% as well in the last financial year. Over into the commodities board then, Brent crude has gone down more than 2% at present, with platinum and gold also falling off, should I say as well. Platinum sitting at $919 fine ounce, just around $1,000 less is where $1,000 more, should I say, is where the gold price currently sits. In terms of your currencies, massive weakness for the local currency. We'll talk about that. 2.3% weaker at present against the US dollar. What has caused that? We'll tell you in a sec. The euro as well, 1.6% down as the South African currency against the euro, with the British pound also similar mark, 21 Rand 46 against the combined currency there as well of the British pound. Let's unpack all of that now as well then. We have Gary Boyson who does join us here from Rand Swiss. Gary, thank you so much for the time. Really appreciate it. It's a market of just red. Where's all of this coming from? It can't just be one scandal, is it?
No, I don't think it's the scandal. I think this has really got to do with concerns around a resurgence in the coronavirus numbers in Europe. We had the World Health Organization coming out and saying that there should be a wake-up call for almost everyone. So I think that's really got markets concerned. We also had the UK, speculating whether they'll go into another hard lockdown. And I think what we've seen recently is that markets just have looked straight through the coronavirus. We got that initial sell-off in March and April. We've seen a big rebound as people assumed that a vaccine would be forthcoming. Yeah. They assumed that we would open up and they could see this was going to be a once-off event. What we have now is that people are starting to get concerned that they have perhaps bounced a little bit too high. And that's where you're seeing the risk off trade coming through. You're seeing it especially in the US dollar as well. So, I mean, a much stronger dollar is just a flight to safe haven as people pick up dollars because they're just too nervous at this stage to be holding the emerging market currencies like the rand.
So does it stay going down like that? I mean, does that become, in terms of the local currency, falling off more than 2%? I mean, that's a massive fall then.
It's a huge fall, but I think we need to remember what happened last week as well. So we had both the Fed speaking and we had the South African Reserve Bank speaking, and it was almost a perfect storm for the local currency. We had very dovish comments out of the Fed, which weakened the US dollar, and at the same time we had the Reserve Bank not reducing interest rates further, so almost protecting the value of our currency because you get slightly higher yield for holding rands. Just I think, and the Reserve Bank trying to protect the differential between developed market currencies and our local currencies. So last week, obviously enormous optimism, and whenever you get these kind of big optimistic moves, they tend to overshoot slightly. So I think this is the reversal of that, combined with the fear around the coronavirus and risk off trade, which naturally will punish the local currency. And then I suppose we've also got the concerns about growth in South Africa as well. That's still here, still persistent. I think the market well understands it. But if we are going into heavier lockdowns internationally, what does that mean for local exports as well?
Not the kind of correction we're certainly hoping for. But let's talk about that scandal then, particularly out in Asia. I mean, 5 major banks really being part of the documents that have come out, perhaps money laundering being a part of this. What does that sort of do for the market as a whole, for investors? Do we look at banks the same? I mean, this is not the first time that banks like Standard Chartered, like HSBC, have been involved in such issues.
So if you look at banks, traditionally the image of a bank, I suppose, in a banking share would be that it's, particularly safe. They generally pay fairly high dividend yields. They're the kind of thing that you put in a very conservative portfolio. I think that the whole nature of, investing in banks is changing, in 2020, definitely. So on the one hand, we've got very, very low interest rates, which is compressing banking margins anyway, which is making it more difficult for these banks to make money. At the same time, regulation is increasing dramatically. I mean, I think anyone who works in the financial services sector in South Africa will understand that we are now part of the global common reporting standards, and the level of due diligence that is required by the Financial Intelligence Center, for example, is onerous. It's high, and the ideas of tax havens all over the place where you can ferret away money and trade through anonymous bank accounts and shell companies, those days are almost leaving us, because as we get a more globalized society, we have to find out who the beneficial owners are, even if it is obscured through trusts or numbered bank accounts. You have to find out who the underlying owners are. And unfortunately, these banks, I mean, the leak from the journalists does cover an enormous span of time. So it covers a span of time that these regulations have been changing. But in today's world, it's just not acceptable not to know who your client is. And with that change, I think it's going to change the banking sector, significantly. You've got to be very, very careful who you're working with. And I think there are going to be very, very heavy fines for banks that are not complying with regulation.
I mean, we're hearing word that even the Gupta family's bank accounts may certainly be involved in some parts of this. So it certainly does get interesting. Very quickly, and I suppose finally, in equity news, Old Mutual share price is just one I wanted to touch on very quickly. A big prodigious fall recent times over Old Mutual's share price, much the same as some of the other financials. But it's a big company still. I mean, one would have thought that the Peter Moyo saga wouldn't necessarily have, factored in too much to the fall in that share price. But they're still down low. What's causing that?
Yeah, so I think if you look at Old Mutual, you're right that it is, it's symptomatic of what's going on in South Africa at the moment. And just with the lockdowns and with coronavirus, it's been very difficult for Old Mutual to sell new products. A lot of their advisors haven't been able to conduct business because they've essentially been sitting at home, and you can only get so much done through Zoom meetings or Skype or whichever video conferencing app you use. At the same time, the Old Mutual that we had years ago is very different from the Old Mutual today, because remember, I mean, we've had the spin out of Quilter and the UK and US asset management businesses, as well as obviously the unbundling of Nedbank. So what is left inside Old Mutual is essentially a pan-African financial services and insurance company. And when you go through a time like we've had in 2020, it becomes very difficult for any business that is whose goal and whose strategy is to go and service the previously unserved customers to grow their businesses. It's almost an environment you want to have, that very established business. And I think that's why Old Mutual potentially taking a little bit more punishment than some of the other insurers.
Sure. Definitely a hammering of sorts right now. Gary, always good chatting to you. Thank you so much for the time. Really appreciate it. Gary Boyson there from Ransford joining us then as we unpack that market picture as well. We're going to take a short ad